Well, hello, good morning. I'm going to start my day off with a quick MCR Accounting Quick Tip. Quick tip number 3. We'll do the presentation a little bit different than the previous two. So, let's introduce Fred and Fran Farmer. They file their taxes on a T2042. They've been farming their entire lives. In fact, they both come from farming families. They are very successful at it from a financial point of view, and today they are in town doing their shopping. Fred and Fran, they like to be conservative. If there has to be a trip into town, they like to combine all the necessary activities. So Fred has dropped Fran off at the Co-op grocery store and mall, and he's carried on to the fuel station. And at the fuel station, Fred, of course, he fills the one-ton truck with diesel. He fills the 300-liter tidy tank in the back of the one-ton truck with diesel. He buys a case of motor oil and a 5-gallon can of hydraulic oil. And all of this is quite clearly for the farm. At that point, Fred pays his invoice, and then he picks up 2 bottles of propane for the household barbecue. He pays for the propane on a separate invoice, and not only that, Fred goes one step further. He pays for that out of a separate bank account, out of a personal bank account rather than the farm bank account. At which point, Fred carries on to the Co-op building supply store. At the building supply store, it's part of the reason he didn't buy more oil, he buys a bundle of fence posts and 2 rolls of fencing wire. And he pays for that out of the farm account. He also buys Fran a new barbecue, which he pays for separately out of a separate account. In the meantime, while Fred's on his way back to pick Fran up at the grocery store, she has just finished picking up all the groceries. And she's at the till now, and she runs the groceries through, and she tells the girl, okay, put that on a bill. And then she's got 4 gallons of bleach and some other cleaning supplies there. These are things that are going to go towards the cleaning supplies for her milking shed. And she asks the teller, run another tape, bill these in separately. So, why are we doing this? Well, from Fred's point of view, there's really 2 reasons. Let's just be honest about it. Fran does the bookkeeping, and she's a little bit intolerant of small sloppinesses that make her day more difficult. So, if Fred brings these receipts home, and they're all mixed together, all paid for on one account, all filled out on just, one receipt at the fuel store, one receipt at the Fran, to emphasize her point, is just going to toss both those receipts. That's become her policy. She's asked and asked and asked, and she's not going to go any further. Fred, of course, never, ever makes this mistake anymore. This is something that's far, a couple of decades in their past. They've had this sorted out for a long time. The real reason that Fran, who is correctly insisting that they practice this level of financial hygiene, is because it will improve their reassessment picture with the CRA. Okay? So how it does that is, let's just say Fred and Fran were new at this and hadn't already learned these lessons. So let's just say there's only 3 receipts now. Fred paid for the fuel and the propane and everything on one receipt, and he paid for the fencing material and the barbecue on another receipt. Fran bought the groceries and all the cleaning supplies for the milking shed on another receipt. And they've filed their taxes, and it's their lucky day, and they've been called for reassessment, and they've had to submit their receipts. And the first 3 receipts that the assessment agent looks at are these ones that we've just been talking about. So not doing anything mean or anything, just doing her job, the assessment agent now has to put more energy, more effort, and more buy-in into this, because immediately, these are the first 3 receipts. She needs to look deeper and find out whether they've been book kept properly then, right? Because these are dirty receipts. So do they clean up in the bookkeeping? So right away you can see where that goes. If these receipts all come out clean, I promise you, so will your reassessment, right? Because here's the real thing. If you're running a big farm like Fred and Fran are, there could be, well, there will be hundreds of these in a year. And if you rely strictly on bookkeeping it out rather than the type of financial hygiene discipline that Fran has imposed on their farm, if you rely on just bookkeeping it out, it's just a certainty that some are going to slip through. And then Murphy gets involved. And those some that slip through, they're always the first ones your reassessment agent pulls out of the box. It's just the way the world works. So, with this being MCR Accounting Quick Tip number 3, I'm sure people are beginning to discern a certain pattern here, and that's intentional. So we'll see where I go with Quick Tip number 4, but thanks for stopping by today, and stay tuned.